The IRS announces a change regarding taxes and retirement accounts. It raised the amount that Americans can set aside for retirement in their 401k and other tax-deferred plans next year. So what does this all mean for you? Richard Tullier Jr., a CPA partner with Wegman Dazzett APC, is joining us to answer some of those questions today. Thank you for coming in.
No problem, Liz.
Always appreciate you keeping us up to date. So first of all, which age group does this IRS matter apply to?
It's going to be really any age that's working, whether they're working as employees, your stock boy at the local grocery store, on up to anyone who's still working, even through retirement.
Okay, so it is everyone.
Yes.
So what does it mean when the IRS raises the amount that Americans can set aside for retirement in their 401k and other tax-deferred plans, and how much was it raised?
So what it means is if you have a 401k through your employer, for example, you previously could contribute $22,500. They upped that to $23,000 even, starting in 1/1/24. And if you do a separate plan, like an individual retirement account or IRA, you can contribute $7,000, which was previously $6,500 for 2023. And it's based on how much you work and how much you want to contribute. You contribute as little or as much as you'd like.
Okay, so for people who may not pay a lot of attention to this, but it does impact just about everyone.
Yes, ma'am.
Is this, tell me the good or the bad with this. Is it good? Is it bad? What does it mean for locals?
It's good, especially for locals who either have their own businesses or who work for employers. Most time employers will match a contribution. That's always a good thing. Get that free money from your employer. But even if your son or daughter is starting out at 16, have them put aside $10, $20 a week. It's amazing how much it can add up over time. And setting up an IRA, an individual retirement account, is super easy. Most banks, any online brokerage firm, and any CPA can help you with that.
And when they say they're raising it, meaning what, you won't pay taxes on it? Like, break that down.
So what they mean is when you contribute to a 401k or an IRA, you don't pay taxes on that money. That's pre-tax money. Or on your personal return, you get a deduction for it if it's not coming out of your wages pre-tax.
So for
yes.
people who are saying this is money that the government can't just grab with
That's
taxes,
correct.
or saying the government, federal government is basically saying you could put that away.
For yourself.
For yourself.
And get a deduction on it.
And
yes.
get a deduction on it.
Yes.
So that is the good news in them. And in terms of filing taxes, what do people need to know regarding this change?
Well, the biggest thing is these numbers are for 2024. For if you have it through an employer, through a 401k, you need to notify your employer. They'll take care of it. You don't need to tell the IRS anything. If you have an individual retirement account on your own, you just need to have that paper. That way, there's going to be a paper the broker is going to send you saying you contributed X dollars. You'll need to have that when you file your taxes in 2024.
Well, thank you, Richard. You always do a
No
good job
problem.
of just explaining it, not in CPA terms, so that everybody can understand what you're doing. Thank you so much for
No
that
problem.
update. Thank you.